It's time to take a look at the one that started it all, Bitcoin. For Brave New Coin, let's take a look at some charts information, graphs, what the heck's going on here. And I think really one of the most important things that affects everything from a top-down level is hash rate and difficulty. So for a variety of reasons, including flooding in China and whatever other narratives you want to believe in, hash rate dropped off significantly over the past few weeks, recovered quite substantially rather quickly, but still remains well below the previous difficulty adjustment. So how is that going to affect the network? Block times are going to be longer. The mempool is going to be fuller. Transaction fees are going to go up. Block reward is going to go down because you're confirming less blocks per day. Issuance goes down. You're confirming less blocks per day. Transaction counts go down because there are just less transactions per day, because not only are you confirming less blocks, but you're also pricing out lower transactions, and average transaction values skyrocket. Total fees per day skyrocket. So all of the stuff I'm about to show stems from this exact change in the network, which has a ripple effect downstream in 10, 20 different ways that we see on the fundamental side of things. So the biggest takeaway over the past month has been hash rate. Hash rate has been volatile and down since the last difficulty adjustment. That's the big reason why all of this data is going to look so wonky compared to where it has been. And if we look at when is the next difficulty adjustment, in the next 2 days, and we're getting a negative 11% decline in difficulty. Historically, we don't really see negative declines in difficulty or negative changes in difficulty too often, and typically it does mark a low in price. Why it necessarily correlates to price like that, I don't know, but historically that's what's happened. If we look at stuff like this and stuff like these two here, March 2020, infamously was around there, also negative 16%. So I don't know why it is the way it is, but that's the way it is. And that's what we're looking at currently. So everything I'm about to show, again, block times way up. 15 minutes, 16 minutes, that is a multi-year high on block times. If we zoom way out, how far back does that go for a high? So it's the highest block times since 2017, which was peak miners trying to mess with the network. Is this thing going to explode tomorrow sort of situation? Just to show you how interesting things got. I mean, and if you look at hash rate again, we went from a negative whatever difficulty adjustment at the lows, I don't know what this would have been, to pulling up significantly, and we're still negative 11. So the network took a hit. It's going to readjust. It's going to fix itself. That's what it does. It is aware that hash rate has declined since the last adjustment and will adjust itself accordingly. So it's important to keep that in mind. The sky isn't falling or anything like that. Here's issuance. Here was the halving here in May 2020. And you can see how far down the inflation rate dipped, sub 1.5 over the past week because of that increase in block times, decrease in block reward. And if we look at unconfirmed transaction counts, this is total count. Again, we hadn't seen a rise like this since late 2017, early 2018. And we're just starting to clear most of that at this point. So the mempool, it looks a lot better than it did, definitely. The mempool was also part of this compounding effect where if we get extreme price volatility with lower block times, you're going to get just massive backup, right? We peaked at around 180,000 unconfirmed transactions. Fees went crazy real quick, right? Again, we hadn't seen that since 2017, 2018, just to show how crazy things got in the fee realm quite quickly. So things will back up for sure. Reminds me of that scene in Sword in the Stone when they're washing the dishes with the spell Merlin has, and all the dishes just start backing up. Anyway, that was the mempool. So again, things look better, right? But if we look at the fundamental flows, I don't see evidence as to why the bull trend is over, everything's over, the sky's falling. Again, I'm trying to see where's the evidence here. Are miners selling? Is exchange reserves higher? Are exchange reserves higher? What do trend metrics look like? Miners aren't selling more than they were in January, February, right? So we're fine there. Here's transaction values, which dipped way down. That's on a 7-day weekly basis. Average transaction values way up because there were fewer smaller transactions. Fees got really high. So that's a natural effect, cause and effect there, as far as I can tell. Here's a picture of average transaction fees in the fill here, higher than they were somehow in 2017, which is crazy to think about. And average block size kind of just maxing out on an average basis, not actually maxing out on a ceiling basis, but definitely screaming higher than anywhere really it's ever been, at around 1.3, 1.35 megabytes on average. So blocks were extremely full to the hilt, and fees went way up. Total fees per day did not exceed 2017, but average fees look like they did or have exceeded 2017, 2018. So it looks like the worst is behind us on those fronts. NVT, inverse metric of economic utility, dipped way down recently relative to where it had been on the 30-day basis, on a weekly basis. NVT rising is bearish. That says price is moving up too quickly relative to on-chain activity. Falling NVT is bullish, and you can read into this on every peak and trough if you like. I think it's a bit too noisy to take an actual signal from personally, but there's a very clear rise in NVT since 2018. So maybe inflation adjusted, this looks a bit different. I don't know. Active addresses did hit a new all-time high and sort of peaked on the 7-day basis, definitely, as hash rate took a hit. So again, this probably looks a lot worse than it is because hash rate will adjust, things will go back to normal. Active addresses may once again continue their move upward towards all-time highs, that sort of thing. So I'm not too concerned in the near term. Now, if this network didn't adjust every so often, then it's a big deal, right? But we'll be fine in a couple days, is my thesis. MVRV, another inverse metric of economic utility, basically measures market cap versus realized cap, or how much is moving on chain. And historically, anything above 4 was like a dangerous overbought territory. We got close to 4, but we didn't quite exceed it. So not exactly a bubble high, but definitely a relative high to where we have been in the past. And if we look at this hodl wave, HODL, are the holders selling? So we can look at every coin that's ever moved, and we can give it a timestamp and say what percentage of coins have moved in the past 6 months. Historically, 50% of the network is the top as far as coins moving in the past 6 months. Once 50% of the network moves in the past 6 months, that has been it, really. That has been the top. So we're currently at around 37%. So nothing too crazy on that front either. So all I'm trying to say here is this shouldn't be a top, unless it's different this time. This doesn't look like any other top that we've had on the all-time high front. Looking at exchange reserves, continue to decline, remain low. Slight uptick, but nothing too crazy, right? There's no big reason why all of a sudden price stopped moving up or price started selling off because all of a sudden there was some inflow to some exchange, right? That would make more sense, cause and effect. This is divergent from what you'd expect, certainly, I think. Talk about GBTC for a second. Grayscale's trust still holds 653K BTC. The hope is this converts to an ETF eventually, but we'll see what happens when it happens. I don't believe they have a redemption process, so that means you can't sell. GBTC can't sell the holdings. I don't know. It's weird how it operates, but if this does eventually sell off, you'd expect BTC to sell off. Again, another reason why no inflows to exchanges. Miners aren't selling. Holders aren't selling. It doesn't make much sense and is divergent from price currently. GBTC premium continues to fall and sort of peaked at a discount of around -20 intraday, closing -15 on the 21st. But here's another potential reason why we're more bearish than we should be. I don't really know. I'm just kind of looking for things at this point, but this would certainly be one of the reasons why we could be bearish. Google trends look fine. Past 5 years, BTC big spike since January. New multi-year high for Google Trends, and should we continue upward, I expect Google Trends to continue upward as well, probably reaching a new all-time high before all is said and done. Just to compare it to Ethereum, you can see where that lies, and Ethereum is less popular on Google searches than BTC. All right, let's move to technicals. This is the 2-year MA multiplier. The green line is the 730 MA. The red line is 5 times the 730 MA, and the white line's a midline between the two. Historically, we have reached a top when we have exceeded 5 times the 2-year MA, which we have not done so yet. Currently, that level is at around 85K, and will continue to increase over time with price because it's a moving average, right? Price is currently at the midline, and kind of reminiscent of 2017, again, where we sort of approached the multiplier, failed, returned to the midline, approached the multiplier, failed, returned to the midline, approached the multiplier for the 3rd time, and then we broke. We also retested the multiplier, or the midline, in 2013 and actually exceeded the multiplier twice, sort of within the same year. So if I'm really reading into this, I'm looking at just having hope that we hold above this midline. If we break below the midline, then it's certainly much less bullish and much less of an expectation that we'll actually reach the multiplier than if we just hold above it. And the buy zone for this is currently probably 18, 19K, something like that. And you can see, for the most part, these have been really great signals as far as buy zone, sell zone, telling you to buy in the green, sell in the red. It's really that simple. Looking at the pitchfork since 2019, from the July high to the March corona low, the rate of change has held quite nicely. It has held price quite nicely. It has projected bullishness and strength quite nicely. We got into the danger zone, into the white here 3 times, 4 times briefly. And the idea with this is you sell anywhere in the white in the top, buy the lows down here, and price will like to live in the midline most of the time. So it's definitely snaked around the pitchfork. It hasn't exceeded either level. Overall trend remains intact. I don't think there's any problems there. We're still above the 200-day moving average, which is the red line here, currently at 42K. So I think we're still fine on trend. I'm not really concerned. We reached a yearly pivot, couldn't break, broke down to the next yearly pivot, which makes sense to me. We even found support on this diag, so the technicals look okay as far as continuation here. Now, if we start to get below the 200-day moving average, then we start talking about the midline of the pitchfork. If we get below the midline of the pitchfork, then we start talking about these yearly pivot supports, and then we start talking about the support in the pitchfork. I think the biggest issue here is we spent all of January, February, March consolidating, only to get to April and have all this sell volume with very little buy volume, very little bid. Maybe the Coinbase IPO was a part of this as well, direct listing, whatever. Effectively the same. Sort of buy the rumor, buy the news, hype wore off, I don't know. But very clearly, selling took over here after consolidation, despite setting itself up for a strong case for bullish continuation there. We had a 1050 cross as well to the bear side a few days ago, and on backtesting, historically, this has been rather correct at telling you to get in and out of trades. So if you are looking to get on the long side, I would be watching this. I would be watching the alligator fractal, currently also bearish. So it's the 5813, I believe, MAs. And currently the MAs are crossed bearish. Price is below the MAs. We're working on bearish continuation at this point. How this works is if price is below these MAs and we cross below a bear fractal, you add to your short. If we cross above a bull fractal, which this candle here may print a bull fractal on tomorrow, that's your stop loss for your short. Another stop loss for any shorts here is across through the midline, the red line here. So I'd be watching these low time frame MAs if I'm looking for longs, which I am. I'm always looking for longs, right? Here's the cloud, which has been stellar since October. Told you to get in back here. It's just now telling you to think about exiting your position in the next few days as the TK lines will cross bearish. You can see it had a Tenkan bounce a few times here, Kijun bounce, really brave, valiant attempt at a Kijun bounce here, and it did not hold, dipped into the cloud. So that's your first stop loss, is when we dip into the cloud. Your second close your long signal is going to be the bearish TK cross. And then at that point, you're neutral. At that point, you're looking for two things. You're either looking for a bullish TK recross above the cloud, which is a go long entry signal, or you're looking for what I'm highlighting here, a candle close within the cloud, which at that time will suggest a bear move from 51.7 to 39.7. That's a substantial move. That is, I haven't measured the percentage, but it is a large percentage move for sure. And that is a short trade worth taking. This short trade only triggers if two things happen. If we get a candle close within the cloud and we have a bearish TK cross. Here, we had a candle close within the cloud, but we did not have a bearish TK cross, which basically tells you we sold too much too soon on the daily. And if you backtest this stuff, it is highly, deadly accurate for these edge-to-edge moves. So this will be something I'm looking for, definitely, if we dip into the cloud. Alternatively, and the best part about both of these, this isn't an up or down if this, it's not an this is going up, this is going down sort of analysis. It's an if this then that analysis. If we break into the cloud, we're going to 39. If the 4 hour breaks this diag here, which very much looks like an inverted head and shoulders, we're going to bust up to retest all-time highs. It's also going to be a 4 hour breakout on the cloud. So again, more if this then that. If this fails, if you have a failed inverted head and shoulders, you expect bearish continuation. So currently the volume profile looks good. The price action fits the chart pattern pretty decently. Not perfect, but it's good enough. And ultimately, if we're above the 4 hour cloud, then you'll know, right? So I would be watching these two things very, very closely, as I am. Lastly, we do have an expiry coming up on futures and options tomorrow. So we're gonna see some shenanigans like we usually do around those dates for CME as well as Deribit, which has a pretty substantial open interest expiration tomorrow. And then lastly, I'll just mention the ETH-BTC holistic fund on Enzyme.finance, where you can watch me or participate in the trading of ETH and BTC versus USD, non-custodial portfolio management. You can send USDC or ETH to the smart contract. No mins, no maxes. You can pull out whenever you want. It's perfectly transparent. You can see everything that happens. You can see the last time I took a trade. You can see all the trades I've ever made. You can see who owns what. You can see deposits, withdrawals, all that stuff's all here. And we also have a DeFi portfolio, exact same thing, incredibly transparent. This one has 15 to 20 blue chip DeFi coins. So that's all I have for this one. Like, dislike, comment, share, subscribe. Happy trading.